Hi, everyone. Hello, Warriors. Brock, Ren, Nikita, Mark Williams. Kiwi CAD chart monthly. Using your telescope, Mark. Good man. All right, so we have a little bounce going in the dollar, but my turnaround Tuesday high shepherd calls are in, see this RSI down here in the dollar before we bounce. So a weaker structure than US dollar yen, which is putting in a nice reversal. Cleaned out this low from yesterday by a few pips. This looks pretty good. And we've been pounding the table that USD CAD was not making a new low with the dollar, never took out this low. All we did was get one more flush here, stop hunt. Look at this RSI structure here. So Canada and USD CAD, USD yen, look like we're going to get some counter trend moves. Also, interesting spot where both the NASDAQ and S&Ps came off of. Blake and I were talking about this yesterday. I said, maybe we get a right shoulder up here, Blake. And it came very close back to this 88.6 level and also 61.8 back of this decline and selling off pretty good. You know, it's tough to really go in with both hands and feet anytime, but especially in front of the Fed tomorrow, right? So if you take trades, you got to lighten up in front of the Fed, especially by the press conference where things could, you know, there could be surprises. I still consider the Fed a red event. So I don't like to be positioned and try and guess which way the market's going to react to a comma in Jay Powell's or a question mark or an adverb that could be interpreted in any way. So just something to keep in mind to pair positions in front of that tomorrow afternoon. NASDAQ did the same thing. Right near 61.8 of this decline that we had last week. So this is pretty important if we can fail from here. You know, if we get some type of fib extension from here, you know, the big major bull bear line in the sand is this 97.30 level in NASDAQ, which was previous all-time highs. I've shown this before, that pull on a pullback held before a blow-off. So that's going to be a big area in NASDAQ 97.30. I think we're going to end up taking that out. Dixie, you know, like I was saying before, the RSI structure isn't so good. Actually, what I wouldn't mind seeing in the dollar now is on the Fed, them to sell off the dollar one more time here, take out these lows, and on this 1 and 2 hour chart, hold the 30 RSI mark. Okay, if you want to be up at 3 in the morning, Forex Live is having a big event, and yours truly, I think, is going to be on at 3 in the morning here, Chicago time. And they really have a lot of great guests there. And I talked about, I think it's all day, all night. Just go to Forex Live. No, we didn't sponsor this. I was just invited to speak. Okay, so actually my interview was, what have I learned from the 1,000 interviews from traders I've interviewed over the last several years? And I said, absolutely nothing. Just kidding. I've learned plenty, and I share it during this event that they have. Am I a trader, Courtney Boy? Are you? I want you to go into the bathroom and look in the mirror. Yeah. And when you're looking in the mirror, I want you to say, Not am I a trader, say I am a trader. So we're getting pullbacks in metals from extreme. It happened last night. Almost everything happened last night. Things that I was going to look to do today happened last night. This did. It was just too wild. I was staring it up there. I said, I put a piece on. But after watching the action, you know, you have to risk 50 cents. But what a great scalp if anyone took it for $3-4. And then, you know, if you didn't get up in time, you, you know, very difficult to trade this stuff. And have a reasonable risk now. You know, when you have $2 ranges in silver and $25 ranges, I'm fine, thank you. You know, one of the things I think we have to watch into the Fed meeting. A buddy of mine said that TLT, Scott said it completed at 170. Look, nice, pretty nice divergence up here too. So, you know, I kind of gave up on this comatose market that we have, like the 10-year yield. And, you know, everyone's saying lower for longer. It's one of the most unanimous decisions I've seen. And we actually had, did not get down to that. Here's your daily. Did not get down here. We're just still moving here. I would say if there's a surprise in anything that maybe the market interprets yields, that they're not making new lows. I don't know how long we can just have an EKG of a comatose market. And here's your 30-year. So one of the most unanimous narratives in the market is rates lower for longer. So when there's unanimous opinion, and they even had me saying it, you know, I said, okay, so we're going to new lows after looking for higher yields through this. It's not that I was wrong, it just never went anywhere. Okay, and we'll see. And don't fight the Fed. Very good, DJ. But, you know, I actually heard some rumblings, and I know it's hard to believe, that the Fed, some Fed speak came out that they're a little worried about creating a bubble. So after, I don't know what, 50 years, they're worried about creating a bubble, especially after the last, you know, 6 years or 10 years. And now they're afraid of it. The trend is your friend. And anyway, so I heard that chatter, and who knows? I mean, if they say anything like that, I doubt they will. There's still so much uncertainty with COVID. So stimulus package, I don't know if they voted on it. I think they're still wrangling. Probably it goes down to Friday before they go on vacation. You know, they need, Congress needs a vacation for all the great work they do for us here in the US. Joe knows it's getting presented today. So just one other thing I want to show in gold, the shares. I mean, this kind of forecasted maybe there'd be a, you know, was reaching exhaustion. That candle's not such a great candle in Newmont that we had yesterday. Fairly similar in GDX. Much stronger than Newmont. But, you know, we might even have some type of island with gold being lower. So Newmont, it took a tremendous move for it just to get back to new highs. You know, this was one of my reasons for being bearish. And it paid me a few times before the explosion that Newmont was dragging its butt along with tremendous gold strength. And they were finally able to eke out a new high yesterday after a $200 rally almost. So be careful with your gold share positions. And I think that's, oh, I was looking for shorts in Euro Pound. You know, we might be failing here. And I think there was a pip on Euro Pound here on the pattern in place. Yeah, there it is. Okay, it's bullish. Okay. We got a bearish S&P position that's working out. Okay, very good. Here's some of our closed pattern in plays. Yen. Here's the best team on the internet. I know you're all familiar with these guys, but you have all of us working to do our best for you. Andre's going to be with us today, the Picasso of harmonic charts. So you get a lot of experience here. I think it's 500 years of trading experience. And here's our newest member, Leandro, who's going to be conducting Spanish-speaking webinars. He's quite a musician. I'm not playing guitar anymore. This guy is a master. And, you know, it's worth giving this a shot, at least on a trial. And I'm a believer that you really can't make a judgment about the effectiveness of a trade or a service, a hedge fund, anything with a minimum of 90 days before you can make a judgment. Because I don't care what you say, Dalio, you know, some of the kings of the markets are down 15-20% on the year, and that's even with the market recovering. So anyone who says they don't have drawdowns, I don't think they're really being authentic. So that's part of it. You drive a taxi cab, you're going to get a few tickets. And you're asking me if you own gold. I don't know if you own gold. So that's my a couple of things that I think might be scalps, not as good as they were earlier in the day, but it's US dollar yen. Be nice if they could turn it, but nice little pin bar here. And Canada continues to grind higher. So even if there is a new low here now in Canada for a 3, we're going to have a nice divergence, but there may not be. A lot of it has to do with oil. Yet, you know, I've changed my mind 20 times in oil. You know, I was short last week here and just got out Sunday night. Then it looked like we are going to break down, but it held. For sure, if we take out 40-50, there's a problem. All right. And I look at this action so far. I don't know, it doesn't look that bearish. Almost looks like after yesterday's big recovery, we're flagging here. So I still think there might be a chance for one more high in crude. Okay, so thanks everyone for coming in. I'm interviewing today George in Harmony. He loves this job. That gives him an edge right there. If you don't love it, you better stop doing it because it ain't easy. And so stick around. He's out of Dallas. So we'll be talking to George in Harmony today. Blake, how are you today, buddy? How's everything going?
You know,
you're
I'm doing
Canada.
all right.
What do you think? Maybe we're getting the turn here now?
For what? For
Canada,
the dollar?
USD CAD.
You know, maybe at least for a bounce. I'm not super bullish on the dollar, but
Yeah.
you know, if you looked at I don't know. By the way, I got up like 15 minutes early this morning, and you know, 15 minutes makes a big difference for us. You know, for those of us, you know, Dale, you know this. If you know you get limited amounts of sleep, so if you lose 15 minutes, it's like it almost feels like you lost half of your sleep. You know, sometimes. Yeah, I don't know about you, but that's how I feel. Anyway, so excuse me.
I almost hit the snooze this morning, but that's futile. So
gosh, I wish I could do that. I really wish I could. I think it's because it's also like record heat here too. So that's
God, yeah.
Yeah, we're going to be at 115, 116 degrees this week. So it's nasty. It's hard to even sleep, even with air conditioning on. It just you feel hot. it doesn't matter. You know what I mean?
Yeah.
Anyway, okay, I'm enough complaining. But what I was going to say is that if I say things and I sound a little funny, it's just because I'm a little tired and words didn't come out right. So what I was going to say is the daily sentiment index for the dollar was a little stretched yesterday, and if you were
11.
The DXI was at 11. Yep.
Yeah.
And I think the euro was at 91. So,
when's the last time we saw that, Blake? How many years ago?
oh, well, I mean, we get in the 90s. Like I've seen the euro reach 93, 95. I mean, it's not uncommon. It's just when it happens, you have to be pretty aware. And knowing that
It's been a while.
Yeah, it has been a while. And knowing that we are going into the Fed meeting tomorrow,
yeah,
it made sense that the euro's coming off. I don't know how much downside the euro has from current levels. Although, we do have some patterns in play regarding the dollar. I'm hoping the dollar rallies a little bit further. I'm looking for the euro to maybe stretch a little bit further, but we're going to talk about those charts here in a second. And you had asked about the turn in the dollar Canadian. I do think that, and if you, well, here, let's go over here to the dollar Canadian. If you got the analysis this morning, what you'll see here is the 4-hour false breakdown.
Yeah.
RSI was divergent, right?
Yeah. And
this is an hour ago. The dollar Canadian RSI intraday was divergent, which may have created a false breakdown with the loonie below the 133.50 level. Resistance intraday is the 134 level. We're probing. We just probed above it. We just probed above 134. We got almost to 134.10, 134, like what is that, highs of 7. So you can see how we're kind of struggling as we're hitting this 134 level. But your question is this the low for the dollar Canadian? I don't know, because frankly, Dale, if the dollar continues to stay weak, I think the dollar Canadian has no other choice but to go lower near term. Do I think the dollar Canadian's acting better than the rest of the currencies out there? Yeah. And I had somebody on Twitter yesterday say, hey Blake, I'm long the dollar Canadian because you were bullish. What should I do? And I'm like, first of all, I'm not going to be here I'm not here to tell you what to do. And second of all, if you're in our community and you're in the chat rooms, I'm a little bit more open to discussing what I'm doing and trading and versus, give you some suggestions. But if you're going to just blindly ask me on Twitter, I'm going to tell you, hey, I think it's performing better than the other dollar pairs, but that doesn't necessarily mean you should be getting long. Now today is a day where the dollar is actually performing a little bit better. So I think the choice would be clear that you probably want to look at currencies like the dollar Canadian or the dollar Mexican peso, which are acting better just in general, that could perform a little bit better than other dollar pairs, right? So, the dollar Canadian, if you play it on the long side, just remember you're going counter trend. And that's the thing about buying dollars in general. And I was telling people this yesterday, and you'll notice the difference here, like with the active patterns in play. Look at right here. For me, where it says Blaker, position size, 2 force, which is a half, position size, 1/4, right? Those are counter trend. That's counter trend ideas. So when you're counter trend, you have to be taking smaller positions, because right now the dollar is in what I think is a long-term bearish move from here. We're going to continue lower in the dollar index. This week might just be a pause, a FOMC pause, but I think the dollar is going to continue lower. So if it is going to continue lower and you're buying dollars, you have to realize that you are going counter trend. So be very careful. Now, what I'm going to do, Dale, are you still there? I don't know if you're listening. Yeah. So
I'm listening.
do you understand? Does that make sense what I'm saying as far as counter trend?
It's counter trend. You lower, besides lowering your position size, lower your expectations for magnitude as well.
Yeah, and
of a move your way.
Last night, I actually shorted some dollar yen, and this is I was with my kids and my wife. We're watching the Fast and Furious franchise of movies.
Yeah.
Have you ever watched those, Dale?
Yeah.
Pure, like just
if you like cars,
testosterone entertainment. Yeah, and I got boys, so it's like, and it's got pretty young girls in it. So of course my teenager.
And one of your sons is driving now, right? So you gave him a driving lesson.
He starts driving in a month. Yes.
So. All right. Well, he's getting training watching that movie.
He's definitely.
Look out, you're gonna have some high insurance rates.
Yes, and he's definitely interested in the girls, probably more so than the cars. But anyway,
good man.
I know. Then good for him, But anyway, what I was saying is, before I went to bed, or as I was actually watching the movie, I got triggered on a short dollar yen, and it wasn't big, but I shorted the dollar yen at 105.60. 59, I think, is where my entry was, and it was pretty close to the overnight highs, but I had no problem staying short that until I got it. And it was one of those, I got into a trade, it was small, I got up this morning, I pulled it right back off again. I didn't go into the chat room and brag about it, because it's it's like I wasn't in the chat room last night during the movie saying, hey, I was short, So I just pulled it off this morning. But the whole reason why I didn't mind being short the dollar yen is because I know the trend of the dollar is down in general. You know what I mean? And so anyway, that's I was Mark Chandler from Bachburn Forex yesterday. We were chatting. We were chatting yesterday about the dollar, and I told him, I'm like, I just think that the easy money on the downside with the dollar has been made, and now it's going to be a little choppy. It's going to be choppy for the next couple of days, and tomorrow we should have better direction on the dollar once we figure out what the Fed's going to do and what they're thinking. So let's go through our bias chart. We'll just start here with the dollar index. So as my chart of the day yesterday was the dollar index, what we realize here is we're at multi-year lows, or multi-year trend line, excuse me, spawning all the way back from 2011 to current levels. So if knowing that, there's going to be some sort of bounce around here. It just makes sense. But I will really just say that while we trade below 94, what is that, 94.60, it's bearish. Period. End of story. Period. End of story. It's, while we're below here, this is all I'm expecting for the next few hours, 12, 24 hours, just a little bounce like that. That's it. Right? Is this going to be a game changer bouncing in the dollar? No. We'd have to have the Fed really change its course tomorrow. And you guys go ahead and tell me if you think that the Fed's going to be hawkish anytime in the near future. Yeah, no one's going to say that, right? So the Fed's probably going to continue to stay dovish. And, as a result, the dollar's probably going to just, roll back over again. So any rally back to 94.60 is probably going to find sellers now. So dollar index, 94.60. It's key resistance. We're in a bearish trend. And really key support is going to be these lows, 93, what is it, 93.40, well, 93.47 I think was yesterday's low, but 93, let's just call it 45. That's key support, right? We're in a bearish trend. All right, let's go over to the euro. Let's start off with the euro, or not start off. Let's go back to the euro. So here's the euro. Now you could actually argue here that the euro is developing some sort of flag, but I actually think that the euro is going to eventually break this little trend line here and pull back a little bit. But that's just my opinion. I think that's going to happen before the FOMC. So this trend line and horizontal support here, you can see this trend line here. That all comes in at 1680. Okay, so that's support today. Resistance, I mean, we just have to write 1780. And you guys know this is obviously, resistance. It's a flag completion. 127% extension of this move. 618 retreat. And just so you guys know, I had a order just in case the euro dollar surged above 118. Paul Franco and I in the chat rooms we were talking about, and I think there's a couple other of us talking about the euro dollar. If it reaches above 118, we're going to get short. So it could, because this is a big 618. I was kind of hoping we'd make our way up there, but that's not the case. It didn't, and so we'll just have to note that 117.80 is resistance for now. Okay, and for all intents and purposes, this flag pattern did complete. So, yeah, if you're out there trying to buy the euro right now, you have to just know that this flag pattern looks complete. Now, if we break through like the 118s after tomorrow, following the FOMC, then there's a strong chance that the euro is going to continue higher, a lot higher, and we might just take out that 618 going into the end of the week. But anyway, for right now, support 116.80, resistance 117.80, I think is what I have. 117.80. Oops. 1.1780. Still look at the cable. Okay, so the cable's actually holding up pretty well, but 129 is resistance right now, and the 129 level, by the way, is not great resistance other than it is an AB equals CD completion. You can see that AB, right? AB, CD completion. Like I said, it's not great resistance. It's just that we did complete that. So I would expect any dip down to 128 to be supported. Any resistance up to 129 probably to find sellers. And by the way, here 128. That actually is pretty important support because that was a breakout point. So we have 129, and just in case, the 127% extension of this move comes in at 129.64. Just in case we rip past 129, that's your next level of resistance. If that happens, and the cable is bullish. And by the way, if we dip down to 128, I'm a buyer of the cable. Just so you guys know. Sorry, guys. The thing about the cable is we're above the 200-day moving average. We're above resistance. We're above this trend line. It's bullish. I just want to be a buyer on dips versus trying to buy it at current levels, right? Let's go over to the Aussie. So the Aussie, it's struggling. This is the trend line that Steve pointed out last week. We're just knocking our head up against that trend line. Last night, I was thinking last night we were going to try to bust through these highs, and so I was like, oh, if we do, we're going to make a move for the 7250 level, which is 161% extension of this recent move. But we are actually still struggling at this resistance. So that resistance is 71. I thought it was 7180, but 7185. 71.85 bullish, and nothing's changed here. 70.70 is still the breakout point right here, and we respected that last week. So we have to be aware that while we're above 70.70, there's no reason to be bearish to Aussie. Yes, it's struggling. Yes, it's not following through, like with the euro going higher. It's just kind of struggling up here. Yeah, I understand all that. However, it doesn't mean that the Aussie dollar is bearish yet. If we get below 70.70, and I'm gonna be thinking, okay, we're gonna come under some pressure. Let's look at the Kiwi. Kiwi, same as yesterday. Now the other issue with the Kiwi is we almost made a move to that 67.10, which would have been the completion of the cup and handle pattern, but we made it to 67.0 whatever it is. So now we might have a false breakout. We break back below 66 cents right here. Then you have a double top, false breakout, then that'll lead us lower. So 66 cents, 67 cents. Still bullish, but let's put how these are super important supports for us to hold, right? Okay, let me grab a drink of my coffee. Dollar Canadian, like I was mentioning a little bit earlier, false breakdown. 134 is a resistance, but I think 134 is good resistance for right now. But let's talk for this, for later today, because with a lot of you, I won't be with you later today. So 134.45 is good resistance. False breakdown. Like I said, the Canadian's still acting better than most of these currencies, kind of like the Aussie. But I have to say it again. If the dollar like let's say the euro goes to 120 next week, which is possible, the dollar Canadian will have no other choice but to go down to 132. It will. But for right now, it's holding up much better than most currencies. So for today, and by the way, we tested the support zone, and don't forget, this is the highs way back here from pre-COVID breakout, right? We just came right back down. That support zone has been drawn on my charts since we were here, So, I mean, it's all we're doing is just coming down to the top of the support zone. Remember, we have some spike lows down here. So 134.30. And by the way, Amanda in our chat room, she picked up the dollar Canadian at 133.35 overnight. And
she's good, man.
She is good. What the hell? I don't want to see all this garbage. That's what I want to see. I don't know how that happened. Okay.
The trading mom.
So yeah, she's awesome. She's really, really. Amanda's like, she's great, and she's a scalper, and she's in our chat room. She's very active, and she posts a lot, like 90% of her stuff, and she's just awesome in there. But she just got out of her dollar Canadian from buying it earlier this morning at 130, or earlier in Europe at 133.35, and I said, hey, great pickup. She goes, I've been waiting to buy it. I've had my order out there for weeks, and it finally triggered. So wow. She's been looking to buy it down there, and so she did. Good for her. And that is going to be support today. So 133.30.
I love Amanda.
Yeah, she's great. 3330, and she is awesome. 134.40. I'm sorry, I'm trying to get done here because I'm
sorry.
No, we got Andre coming on. I don't want to take up his time, and Stelios too. But I don't really care about Stelios so much.
That's
Yeah.
Who cares about your partner?
Just
take your
kidding.
time. Take your time, Blake.
Hey, Andre, how's it going? Okay, I'll
How's
be
it
done
going?
here.
Hey, Picasso.
No problem. No.
So here's the peso. You can see this horizontal support held. That comes in at 21.89, so that's going to be support. This is another currency pair that's a little bit better. 21.89. Resistance right now is at 20, because this is the breakdown point. So this is 22.15. Then, in case we continue higher, 22.26. So let's write that down. 22.15. 22.26. Okay. Those are both, and by the way, this is a range and also the dollar Canadian for now. Dollar Swiss. The thing about the dollar Swiss, it's actually trading kind of heavy right now, which I'm a little bummed out about because I'm long a little bit. But you can see this multi-year trend line or multi-year horizontal support. Yesterday we spiked down to 91.65 actually. I didn't think we were going to get back even close, but we are. So
Is the SMB, Blake, I know you bring them up a lot when you talk about the Swiss.
yeah,
Is this going against what they want to happen with this direction, or are they okay with it?
they don't like the strength of the Swiss franc. They want it weaker. So
Okay.
they're constantly in the market trying to weaken the Swiss, but they're more concerned about the Euro Swiss. And so less concerned about the dollar Swiss, but you can see the Euro Swiss has had it just really bums me out. I actually was long, like 3 days before this move, I was long at 105.20 or 30, and I got so frustrated with it. I'm like, yeah, I'll just take it off. I was long. I had my stops below like 105 or something, and I missed that whole thing. I was like 2 days early, 2 or 3 days early. So frustrating. Anyway, whatever. I'm not bitter. Yeah, I am. Okay, so let's go back to the dollar Swiss. So dollar Swiss resistance right now is 92.40. It's this previous support here, so it's 92.40. That needs to be broken to kind of shift things. This I believe is bearish still. Okay, dollar yen. So the dollar yen, massive breakdown from the weekend. And by the way, I took the pattern and play off yesterday. If you guys don't understand why I took the pattern and play off here in the dollar yen yesterday,
618.
is because we're at the weekly 618, and I had somebody that or this is the this one right here, 618 retracement. Somebody asked me about my week ahead video why I didn't mark up here and I marked up over here. Is because I was actually looking for a confluence of fib levels from an extension, from a couple extensions, and that's why I was looking at that number more than anything else. But anyway, let's just understand that the dollar yen has a lot of support down here. This 105, I'll just call it 105.10 right now. But I do think we are now starting to break down. I do think that any move back towards 106 is going to be an opportunity to sell it. So, okay. This is holding for now, but I actually believe that the dollar yen is going back towards 104, down here towards 104.50, maybe even below 104, I think is what's happening over time. US dollar, Norwegian krona, I don't think anything changed with that yesterday, but let's check it out. There it is. Okay, US dollar, Norwegian krona. So support 903. And resistance right now, in my opinion, we have to get above here in order for this to start really squeezing. So that comes in at 925. So 925. And this is one of those currency pairs that it's bearish now, but you know, if crude oil starts to roll over, I wouldn't be surprised if we see a little, you know, squeeze higher in the US dollar Norwegian krona. Okay, so just I think you should keep an eye on the US dollar Norwegian krona for quite possibly a move higher. Okay. Gold. Let's talk about gold. Now I know everybody wants to short gold because it hit 2,000 and the futures overnight. It's overbought. Can't go any higher. It's no way. Do you guys understand that we are at all-time highs? We're at all-time highs and we're holding all-time highs. So you can see the all-time highs at 1920. Let's just call it roughly 1920, but it's at 1923. We rallied, got a little crazy, pulled back, probably stopped out a bunch of week longs, and now we're bouncing again. And you can see how we're just, look at the hourly candles, how they just continue to hold this is the 1923, this is the breakout point. It was holding, and now here we go again, right? Do I think that gold can come down? I do. I don't, you know, at this point in time, like I explained yesterday, I'd rather be bullish gold than bearish, but would I be a buyer right at this point in time? No. I mean, I wouldn't. I'd love to see it pull back towards 1840 and then make another surge past 2000. I think that's probably more realistic, but that doesn't mean I'm going to short it either. Because, you know, the day I short gold is the day that it rips to 2200, I would think. So anyway, for today, support 1906. This is spot, obviously. Resistance, sorry, Andre, I'm almost finished here. 1960. I know we've been higher, but I think that's going to be pretty good intraday resistance. S&P, I don't think S&P has changed at all. We held 3,200, which is really important for the stock market. Where is it? 3,200 held. Important support. Resistance is going to be 3,300, and I'm just going to write that down because it's, while we're above 3,200, it's still bullish. 3,300 should be resistance, and then we're just going to do that. Okay, I'm done. Sorry. Stelios.
Thank you, Blake.
You're
Hello.
welcome. Andre, good morning. Dale, good chatting with you, and have a great interview. I'm going to pass it over to you guys because I'm done speaking. I need to give time to you guys. So, thanks.
Okay, buddy. Good
Thank
luck
you.
today, Blake. Hello,
Thanks, guys.
Andre. Hello,
Thank
Stel.
you. Hello.
Andre, you can take the screen if you want. I only have
Okay.
two things to talk about. One is the stimulus package that was announced by Republicans. The Democrats called it pathetic, and we're starting to negotiate. But you know, it's on the table, and it's going to change a little bit here and there. But it's going to be passed eventually. The main thing again today is metals. I've been talking about them in the chat room. I actually tweeted yesterday that there's a huge silver I'm long. You know, you guys know that I have been long for a while. There was a huge resistance zone around $26. I tweeted about this. I said, look, everybody's looking at this, so it's probably going to stop a little bit lower. So I put my take profit at 25.20. It got filled. It actually went just above $26. I was surprised by that, but now it's gone back down. And I did write first thing in the chat room this morning, telling everybody who was there, look, I was triggered there, so I got out and I got long again at 23. It did go a little bit lower, but I bought that little piece back at 23 and just riding it again. I still think that metals are going higher. Of course, we might see another slam another little push to get rid of weak longs, but I think we're going quite a bit higher, especially silver. So that's my view. I would love silver to go towards $20.5, $21. There's a huge support zone there. I would get a lot longer there, but for the moment, just riding it as it is. And that's it. I don't have much else to say. We have very little data today. We had very little data. So I'll let Andre take the rest of the session, and over to you.
Thank you, Stel. Nice,
Thank you,
beautiful
Stel.
trade. You know,
Yeah, well, good
those
luck.
happen. You know what? Maybe
Sorry?
once a year or once every couple of years, an accelerated move like that.
I've been riding the position for about a year and a half.
Since I've known you.
So there you go. Yeah, almost 2 years now. So, you know, I've been waiting for this. Anyway, it's good to get some luck as well, I'm sure. So
Yeah.
there you go.
Yeah, the trading gods.
you
You
call
made
it-
a sacrifice to the trading gods.
What you
sold a
call
little.
what you call luck, I call discipline, Mr. Stelios.
Well, it's
And
very
that's-
difficult to stick there for a year and a half with something that's doing nothing. And
If you don't
just-
have discipline, for sure you are not able to hold your positions.
Yeah.
So that makes part of the process.
Stop talking about my
Congratulations.
trading, Andre.
No, it was a gorgeous trade, and I don't think that we saw movements like these on the metals
For a long time.
for a long time actually.
Yeah.
So and look the difference between silver and gold, with gold printing new highs and higher
that
highs,
too.
and silver just there. So actually, I was well. I came to nothing when the market is trending like that way, like that, because when I search for one harmonic pattern. On those conditions, it's very difficult to participate, obviously, unless you search for trend continuations, harmonics, or patterns that put you in that direction. What is happening at this point, and what we are facing, it's the 168 extension from the very last swing low, so from this very last movement from September 9th, 2019 to the most recent lower lows there from March. So we are now facing the 168 extension, and we can see that on a daily, actually the market has felt some pressure there. If we measure the fall, or the most recent fall, the market has already fallen 14% during overnight, basically. And well, we're still facing that Fibonacci extension, so I will not be surprised with a deeper fall based on the ratios presented. So basically, this is kind of a weekly extension to the 168 extension. So I will not be surprised if the market decides to pull back and retest the previous structure resistance. I'm not expecting that, but I will not be surprised if that happens based on those ratios. Gold, I published this chart before, so actually there were quite a few calls for gold. I remember I published this chart when the market violated this structure, this descending trend line resistance. So that makes a great call, breaking this structure. The market has then later printing lows, retesting that trend line, which has offered another opportunity to try to go long. And then this cup and handle here, I believe it was, I can call it a cup and handle, or inverted heads and shoulders if you want. That was the trigger to violate this bigger or this larger consolidation period, or moving sideways. And that was the call to try to, that was the pattern that calls that long side momentum for gold. I shared this like a weekly bearish bat pattern at 88% fib. So I was expecting some pressure there, without ignoring obviously the momentum that we are living at this point. And I saw a Twitter today saying, or quoting, Gold is the best. Gold don't think there will be a vaccine to the COVID. So the gold thinks the Fed will constantly print money, and that's why we are seeing the market pushing so high. So I don't trade based on fundamentals and based on sentiments. I trade based on what I see on a technical perspective. What I see at this point is a new higher highs above the previous historical highs, and we are approaching, and we are trading right in the middle between this box between the 113% Fibonacci extension and the 88% Fib. So inside this area, and which is a huge box for sure, so it represents nothing more than 10% range. So inside this range, I will not be surprised to see the market starting to print something which allows me to think on a short side for gold. For now, I don't have that kind of a behavior presented, so I'm not expecting that reaction for now. I need to wait for that to happen. But just to mention that we are trading inside this range, inside the bearish bat and alt bat pattern range. So I will not be surprised at some point for the market to fall and eventually a 38% Fibonacci retracement is the default expectations for the pattern. Above these levels, and because the market can extend and can actually ignore this territory, there's only another pressure level that I will pay attention for.
Wow.
And that requires a lot more for gold at 2460. So this is the 161 extension from all these swing lows. So this is the bearish crab pattern. So around, and I will think the same, around that price level, we will find for sure some confluence and some convergence between other Fibonacci levels if the price starts to rise. So at that level, I will start to pay attention if the market fails a major or deeper fall from those levels. So let me just, because we are talking about commodities, this is crude oil. And I believe we are trading a very crucial previous structure support area. Previous support is now a resistance. I do believe, but this is just how can I call it? This is just one symptom that I have. I believe the market needs to retrace a little bit before going higher. I do believe the market will search for that 200 weekly moving average at some point, but not before a retracement. So basically, I search for a pattern which allows me to think that will happen, or that allows me to take an edge from there. So basically, on a daily perspective, we are now, and we're still threatening that 168 extension from this very last swing low from April. So basically, this structure over here, this is an ascending wedge. I believe it will break below at some point. We're still threatening, as I said, we're still threatening the 168 extension. We are trading kind of a bearish shark pattern territory. That price, that shark pattern, as always, can extend it to the 224 extension. But before that extension to the 224, I believe the market needs to retrace. And that's why I draw this potential violation of the structure and then a recover. And eventually the market will print, will find some pressure on both of those levels. It's not the first time, and it will not be the last for sure. The market will print both of those sharp patterns, the 168 extension and then later the 224. So at this point, I'm bearish for crude oil. The Dixie, I need to share this chart. This is a monthly chart. I don't want to scare people with these huge time frame events. But I believe trading on a lower time frame with the Forex at this point is very, very tricky. As mentioned by Blake, when we trade on those environments, we should try to reduce our leverage, our position size. We need to take some measures in order to prevent emotional, irrational behaviors. So that how I deal with my emotional behaviors is with technical approach. I need a technical perspective in order to eliminate some of those emotional bad reactions. So I stay loyal to some of those technical. So I believe trading the Forex in this environment requires a lot of position management control, and not only.
Guys, take a screenshot of this and refer back to it. This is a lot of real nice work in one picture. Thank you, Andre. That's really nice.
This is just a picture that requires validation everywhere. So basically, we're still trading a range between one potential technical double top, a technical double top, because we see the market retesting the close price of the first top and then rejecting that close price above. Actually, the market can extend above the highs, but needs to close below the close price of the first high. So that for me, it represents the perfect technical double top. Obviously, that pattern will obviously validate below this previous low. So that also represents one eventual inverted edge and shoulders. Basically, this is the previous structure highs from 2018, 2009. So previous structure resistance. This is actually the head for the potential edge and shoulders. That inverted edge and shoulders will validate only above this previous high. So the invalidation of the technical double top will validate that, and will trigger, or it may trigger, we don't know what will happen next, but
you are a believer that head and shoulders formations can be continuation formations.
I believe
reversal formation.
I believe that inverted edge and shoulders, specifically after this impulsive swing over there, I believe that can put dollar trading higher at some point. I'm not saying that will happen. If we go into a weekly time frame, and let me just show you something that sometimes escape to our eyes, because between these lows and these highs, we have Dixie printing actually lower highs and higher highs, so trend continuation. Then we have a new higher high here, and then a lower low there. And then we have the 127 extension there. So basically, we have kind of bearish cipher pattern on hold at 78% Fibonacci extension. So basically, 91.36 bullish cipher pattern, and that may help the formation of the right shoulder at a trend line support, a major trend line support there. This is kind of a parallel channel that I draw here. Actually, it's a parallel channel, and if the market finds support there, eventually it will help. It will be helped with the bullish cipher pattern, which can provide some nice risk reward approach for the right shoulder. And then obviously we need to wait for the validation above the eventual technical double top. So that may trigger the inverted edge and shoulders. Default projections, what is funny about this chart, it's not only the pattern that the market is trying to show me, but the default projections for those inverted edge and shoulders and potential double top. So the double top default projection will put the price at 88% Fibonacci below, and the default projection for the inverted edge and shoulders will put the price at 88% Fibonacci above. So basically, we have the major bearish bat pattern above, kind of not an historical pattern, but it's a huge, monstrous pattern at 88% Fib. So that $115 And then below at 88% fib, we have that 76.14. We have the bullish pattern, actually a lower degree bullish pattern projected below. So that's kind of interesting to watch what will, and to see what will happen from here.
Well, it's interview time.
Yes, it is. And
if you could wrap it though, but go ahead.
No, it's okay. I will jump in another day. Don't
Some real nice stuff, Andre. I love your work.
Okay. Thank you very much.
Time passes
through our fingers.
So, you know, Andre's one of the best harmonic pattern guys I know. I've interviewed quite a few.
Thank you very much.
Thank you, Andre. And if you could stop sharing, I'm going to bring George on. Hiya, George. I'm going to set you up as a panelist. And here we go. What happened here? Thought I did. George? Okay, I must have hit the wrong thing. Hold on, George. I'm going to make you a co-host. How's that? Let's try it. Hi, George. Can I ask you to unmute? All right, I'm going to do this. I'm going to do this again, George. Get you going. And change your role to attendee again. Okay. What happened to you? There you are. Promote to panelist. Welcome to Face, George. Asking you to unmute. Hello, George. I can't hear you, George. Oh, you know why? Hold on a second. It's my bad. Let's try it now. How about now, George? I can't hear you. Let me, I see your screen. Can you unmute? Really interested in hearing these Renko charts here. Okay, George, let me try again. Check your computer audio settings. Do you have a mic? Hi, George, do you have a mic? Can you hear me? I do. You tested it before you got on. All right, let me try this one more time. I'm going to change it to an attendee. Never had this issue before. Now I lost George. Are you here, George? Okay, listen, I apologize, everybody. I'm going to have to reschedule George. I really don't know what happened here today. Okay, so you're welcome, Hamid. All right, so that's going to be a wrap. I really don't know. I think he's gone. Yeah, I don't see him. All right, everyone. So good luck the rest of the day. We'll see you tomorrow. You're welcome. I apologize, George, if you're there. Adios. Remember, don't just count your pips, count your blessings. Good luck today. Trade safe. Remember, we have the Fed tomorrow. So pair down and prudence over value. Oh, George is back. Okay, George. Let me try it now. Okay, let me try it now. You're not coming up as a panelist when I do that. Oh, here you go. Okay, I'm asking you to unmute. I still don't hear you.
Can you hear me?
Now I got you, George.
All right, all right. Well, sorry
What was
about
the
that.
issue?
Well, I mean, I logged on and clicked all the buttons that I'm supposed to click, and it wasn't show. You couldn't hear me. I could hear you though. I could hear
Okay,
you
you could
clearly.
hear me, but we need to.
So whatever
hear each other.
it is, we figured it out.
Yeah, there you go. That's an attitude of a trader, and persistence and not giving up. So,
Yeah.
have you used Zoom before, George?
Have I used Zoom before?
Zoom.
Yes. Yes.
Okay,
Absolutely.
so you can share your screen and we could get going.
Sure. Here we go. Let's go. I was about to say, you guys are not going to get rid of me that quickly. I'm going to keep coming at.
And I wanted to talk to you about you use Renko and Wix, which is kind of a lot of people that use Renko use it because they don't want the Wix, but we'll get to that in a minute.
Yeah, you're cutting a little bit though, so I'm getting bits and pieces of what you're saying. But
oh, you're not hearing me well?
You're cutting off a little bit, but we can make it work. So let's just.
We could always reschedule, George. Maybe it's just the day.
A technical issue. I mean, I'd like to talk to you and your audience. So let's make it happen.
All right. So I went to your website.
Okay.
And I saw you broke in with a hedge fund. Why don't you tell us what you were doing before a hedge fund invited you to be part of their team, and a little bit about your journey.
Oh, the journey. Okay. Well, before we start, I just wanted to kind of thank you for taking the time today and invite me to be part of your family. I've been watching you and following your content for quite some years, and what draws me to what you do is that positive vibe that you put out every morning in your affirmations that you put out on Twitter. So I just want to kind of thank you for that, because it literally it puts a smile on my face. So
I'm glad to share those, George. I'm glad that it feeds you.
Yeah, it sure does. And as far as my journey, it's started in '98. You know, a friend of mine told me, "Hey, do you know about the golden rule?" I was like, "What is the golden rule?" And he goes, "The man with the gold makes the rule." I was like, "Okay, well, I want to be part of that one." And I was getting out of college, and I was, you know, looking for a path in life, and I saw this magazine called Inc. magazine, and they talked about the lifestyle of a trader. And I was like, man, you know, that seems like a good path to go. How hard could it be? Of course, how hard can it be? You start off thinking, you know, this is going to be easy. Then you figure out that there's a lot of skill that is required to actually become an effective trader. So I started my journey because of that thought process. And it took me to initially starting to trade my capital with limited success. It wasn't even my capital. I borrowed that capital initially. Then I started producing some success, and I got hired on with a hedge fund as a junior trader. And I moved through the ranks to eventually became the head trader of that firm. That journey lasted about 4.5 years before the owner of the firm decided to do something else. I learned a lot from that. And one of the things that I truly changed my life as a trader, and I learned so much from it, is an idea. And the idea is money loves structure. And that the owner told me that, his name is Mike Van Haas, a very smart, successful entrepreneur. He told me money loves structure. And I sat there and I thought about it. I was like, I know it's profound, but I can't yet understand what you're telling me. Like, how does money love structure? What is structure? You know? So he goes, listen, anything that you want to be great at, not good at, great at, you have to put a structure around every aspect of it to where it becomes efficient and it becomes a muscle memory. Then you won't have to think about it because it becomes part of your universe, and it becomes part of your flow.
You create your own paradigm,
and it just becomes a muscle memory, like part of how your mind work. I was like, okay, well, that's interesting. So how do I apply that to trading? Okay, because that's the path in life that I chose for myself. And he goes, okay, well, dissect every aspect of your trading and put an efficiency in. So that is the moment in my trading life that shifted it all, because I stopped looking at it as I'm in front of a casino looking to see how I'm going to get lucky today. And it became a business where every aspect of it is under my personal control. And I can craft my path as I wish. So for example, before the winning in trading starts in the morning. And how it starts is the moment you wake up. So what do you do the moment you wake up? I drink a cup of water. So this way my body can flush toxins and I become more clear mentally. I chop up and eat a clove of garlic, because that will pump you up with a lot of, it thins your blood if you looked into it, or when you look into it, it thins your blood, and your circulation in your body will start.
It also keeps away algos and vampires.
Here you go. Right? There you go. Absolutely. Somebody told me that too, and keep your good friends away from me too.
Yeah.
Yeah. So that's another thing. Then I go into stretching, 20 minutes worth of workout, then 20 minutes of breathing and Vipassana meditation, which I've been a Vipassana meditator for the past 15 years. And that's
what kind of meditation, George?
It's called Vipassana.
Okay.
Vipassana meditation. Look it up. It's very intriguing. It's actually, you go to a meditation hall for 10 days and you're isolated from the world. You can't basically talk to anybody. They call it noble silence. And they teach you how to meditate, and you do it in complete isolation. So that also had the harmony trading system came to me from that experience, actually.
Wow.
So
what a ritual that
it
you
is
have
a ritual.
in the morning. Yeah.
Absolutely. So then after that, I go and watch an affirmation video that I put together that puts my mind in a state of, I am going to be successful today. I'm going to make money today. I'm going to make good decisions today. No matter what happens today, I have control over my reaction to it. And I'm going to be okay. I'm just going to keep doing this process over and over. And the beauty is the day has not even started. I start this process at 2 hours before the cash market open. And once the cash market open, I am qualified myself to become a trader. If any of what I've just said earlier does not happen, that automatically disqualifies me from participating in the market because I am not 100% ready to engage it. Because
what
I am
time
not
do you
100%.
get up in the morning, George?
Go ahead.
What time do you get up in the morning to do this?
The earlier the better, typically 5 o'clock. Central time.
And how long does going through this discipline that you have before you start trading take?
How long does it take? It takes probably about an hour and a half to do.
Okay,
and
so you're ready by the, I don't know what time zone you're in, by the New York
Central.
Open or what? 6:30
by the New York Opens, correct. So Central time. So 8:30, which is 9:30 your time, right?
Okay.
That's by that time. So about 7 o'clock your time, about 2 to 2.5 hours. And the idea here that I'm trying to communicate to your audience is have structure. And the structure is not just your trading structure, but how you get into this zone of flow, of zone of you are most effective. Athletes.
I think athletes call it a peak performance state. Athletes, yeah.
Absolutely. And every single one of them has a ritual that's similar to this in some way. Obviously, they'll customize it according to the sport they're playing. In my case, the sport I'm playing is trading. They could be playing basketball or football or whatever, but the principles are the same in many ways. Is before you actually do the physical aspect of your profession or sport, you have to have the mental aspect of it well structured, under control, and well practiced. So once all that is, once I qualify myself to be a trader, you know, if I don't do any of this stuff, I'm done for the day. I'm not trading. I would go into looking at the market. It takes me about 5 minutes to look at the landscape and say, okay, I understand it. Okay. Then from 8:30 Central to 9, that first half an hour of what the market open, the cash market open, I am watching, listening, and breathing. And just watching what this market is doing, watching who's getting trapped and why. How is the market behaving? How the market is expanding or contracting? And literally, I'm quiet and I'm just listening to the vibration of this market. And once that half an hour pass, I have enough information, in my opinion, to start going into the next phase of this trading day, which is...
George, you know, I've been asking or recommending people teaching that people ask this question when they're looking at the markets before they do a trade, wondering if you do. Where are the stops?
Okay.
Do you ask yourself that question?
It's absolutely. I mean, that's part of the trading. Part of dissecting your trading plan is to understand your risk. So
no, where are the stops in the market? Not where are you going to place yours? When I look at a market, I'm trying to figure out who's vulnerable. I'm looking at swing highs and lows where, people say, Dale, where are the stops? And I go, well, all you have to do is pretend you're short and tell me where you would put your buy stop. And 90% of people would put it over the same high. And I go, well, that's where everyone's is.
Yeah, and in many ways, that's how the market constantly is moving. It's seeking these stops, and the answer that I give our traders, the Harmony Trading System, is typically the most recent low is where people put their stops as well.
Right.
So they need to kind of factor that into their trading and watch for that to actually happen, and see what the market is doing there, because the probability is the market run through the stops and reverse, because it's just done consuming those levels of participants. But as far as to answer that question is typically the most recent lows or most recent highs are where people are parking their orders.
Okay.
And that's
Can I ask you how you came to, instead of using bars or candles, how you came to choose this chart style of Renko candles?
Absolutely. It's I've tried just about every type of manifestation of price action. And from time to Renko to XO to just name it, and I've tried it through my experimentation. I found that Renko bar with wicks manifests the best possible set of information that I can feel comfortable consuming. I found out from trading that my goal is to capture momentum and capture motion, and the only focus that I need is to focus on that versus, for example, time. Like there's a lot of excuse me, let me drink some water here. A lot of people use time charts, and that's fine if it gives you all the information you feel like you need. For me, I rather take that element of time out of the equation and just focus on motion. So, for example, this is a 20 NT Renko. The 20 NT Renko reflects a 10-point move in NASDAQ 100. So sometimes that will take a minute to build. Sometimes it takes half an hour. The amount of time it takes is not relevant to me. What's relevant is that event and that behavior presents itself. So
what time frames are you using here on these Renkos?
And that's the thing. There's no time. There's no time frame.
Okay, so it's just a kind of like a tick chart. It's everything that's happening. It's not 1 minute. It's all the turn. Okay, interesting.
Yeah, zero time involvement, because another thing in trading, you're looking to reduce noise in your decision-making process. So if I'm looking at motion in the market, then I'm looking at noise. Looking at motion, then I'm looking at time. Then I'm looking at two elements. If one of them is not relevant to me, then I cut my noise by half, and I'm only looking at motion. and
Interesting.
And in trading, to kind of continually be consistent and successful, the idea of reducing noise into your signal is going to be very paramount as you go forward in your journey as a trader. You want to simplify it as as much as possible, and you want to reduce the noise to where your decision becomes automatic, quick, and decisive. So,
Okay.
So after that 9 o'clock, when I watch the market, I start going through the process of trading. And the way I look at it is fairly simple. I'll give you an example here. If everybody's watching my trades or my screen here, is I'm looking at a shift in the personality of the market. So I want to know if the participants and their mood changed from negative to positive. So this cloud is a negative cloud, meaning that the market was shifting lower. Now it shifted long. The moment it shifted, it gave me a green dot, and that just telling me that the personality is changing. Once that happened, I have a 5-step process, and everything that I do has to be a rule-based thought process. It's not subject to my emotions. In trading, the biggest impairment to trading success is you interject your own emotions into the equation, and your decisions become clouded. So I needed to systemize everything that I do from the morning when I wake up all the way to the decision of pulling the trigger. So
and
here,
is this a proprietary charting package where your dots are based upon coding that you've done or hired someone to do?
I developed every aspect of that equation. So all these lines that shows targets 1 through 5, that's harmony targeting system. The cloud and shifting them, the logic of that is done by us.
Quite a renaissance man you are, George.
Trading is my passion, and I committed through my life.
Do you dream about trades?
I dream about it. I wake up thinking about it. I talk to my wife about it, and she's stopped talking to me for a while. She's like, okay.
I know what that's like.
It is an absolute obsession.
All right. Okay.
So here, basically, the decision is the market shifted. I'm looking for a pullback and a reversal that tells me that the market is long, and my entry will be, is right here at 623. That's where the signal will generate. And then I'm looking for target 1, 2, and 3. And sometimes you'll get the market that runs to target 4 and 5. Your stop is where that 610. So every aspect of this is telling you where to enter, where your targets are and why, and where's your stop and why.
So this is a live trade happening right now, right?
This is a live trade that's going on right now.
Wow.
Yeah, everything is automated and everything is structured. So you can't, the only thing that I do at this moment is click the button and entry. And once the entry is done, I do what a monkey does, which is walk away. Push the button, walk away. And what that means to me is the decision has been made, and everything else needs to be automated to continue to preserve my edge. So that
so there's target 1. Do you take partials on a trade like that at target 1, target 2, and target 3? Are you coming out in thirds and then moving your stop as the market moves in your favor?
I found that you're better off taking full in, full out.
Oh, okay.
Statistically, I was surprised to find that would be a better approach than trying to piece out. So if I take, for example, target 1 consistently with 3 contracts, I do better than if I go break even and try to run for target 2 and target 3. And that was the most surprising part of running.
That surprises me.
Statistical analysis, because logically you would think that it should be where you should let your runners kind of run. But if you when you define the market for what it is. Like, for example, if we have an expansion in volatility, automatically I'll start looking for target number 3. And when we get to hyper active market, I go to target 4 and 5 and just stay there. So meaning I will put an entry and look for the target. I found that to be more monetarily effective than on a daily basis look to get one contract and go for the next one. Now, traders have different personality, and this system is flexible enough to where however you want to do it, you can do it. If you want to just get to target number 1, punch out one contract and go for target number 2, hey, it's your world. You do as you wish. Okay. But that's an effective. Another part of this equation is channel analysis, which we were very heavy in. That is once we have this automatically look at that, the market is running up to target number 3.
Target 3.
So the first and look how they're reacting to the target.
Yeah, they reacted pretty good from the buy too.
From the buy. So right here that's what we call an inception trade. So that's the every trend has an inception point, and that's the inception of that trade, of that wave of buyers. Then you have what we call a first continuation, and we have 4 to 5 signals, that we teach our Harmony traders, how to interact with the market through those 5 signals. And once they learn them, they pick one that they become very effective at, and their personality, it fits their personality. And that's the one that they dedicate their time expanding and trading and profiting.
It's interesting you say fits your personality because you know who Jack Schwager is, right?
Yeah, absolutely. Yeah.
Okay, so I interviewed him and I said, Jack, what's the most important advice you could give traders? And he said, find a trading style that fits your personality. So
absolutely,
and he's interviewed all the legends. So
and you know what, you don't have to be good at everything in trading. You just have to be very, very good at one thing, and
I agree,
make a living off of it.
And you don't have to be in 100 markets either. It only takes one, right?
No. I trade 90% of my trading happens in NQ. 90% of it. I am a specialist in NQ. I breathe it on a daily basis. I can tell you the average rotation of it, when it's expanding, when it's contracting, how it moves. It runs in 5 to 7 candle moves. Then it pauses. I understand the personality because I spent a lot of time with that personality, and we became very acquainted. So when you're trading, if you're jumping from one pool of money to the other, you will be at a disadvantage to somebody that is just trading as a specialist, NQ or crude oil or YM. So that's another advice that I would part to your audience is don't try to be jack of all trades. Be a master of one, and don't trade every instrument. Be very, very good at one, and understand that money loves structure, and trading is a high performance sport. So be ready. So that's kind of.
This was a great interview, George.
Oh, well, thank you. Thank you for having me.
Yeah, I'm sure after people see the recording or our viewers that are here watching it right now, they probably want to know, after seeing this demonstration, how they could reach you.
Absolutely. So
why don't you show your website? And
absolutely. So let me share with you my website. And actually, I'm going to extend everybody a 1-month trial in our room, so they could come in and see exactly how we do it day in, day out. And Harmony Trading System. Let me type this in. Give me a second. So
probably have to be a new share.
Let's see here. I think you could see me. Here we go. So type in harmonytrading.system.com and come. I was a lot younger then, and
Okay.
you could sign up right here and get a one month trial with us in the room. And actually, I have a link that I can give your audience that they can join us today and see the room as well.
Go ahead, post it in the chat.
Let me see where the chat, a Q&A. Here you go. I think that's it. No, that's.
And George, you know, I'd really like to thank you for your patience with, you know, I'm low tech or no tech anyway. So your patience for sticking around, and really a fascinating presentation. I learned some things from you. Certain things were reinforced, and you know what happens after you survive your first interview with me?
What happened?
You become my trading warrior brother.
All right. I am very proud and very happy to be part of your family. And I'm telling you, I've been watching you for some time, and I do appreciate all the great content that you put out there. It's a great contribution to the trader and investor community. So thank you very much.
Okay, and I really want to thank you for coming here and tell people, you know, give George a shot. I mean, that was an excellent demonstration of live trading. Doesn't happen much in here, and shows that you walk your talk. And
Absolutely.
I want to
thank you very much,
George.
Absolutely.
And you know what? Here's something interesting. If you follow George's ritual, and you're going to have longevity, because you're going to, you know, it's hard to stay healthy with all of this stress that it takes on the journey of becoming a trader. And the worst case scenarios, you follow George's holistic approach, which includes your lifestyle besides trading. I'd rather be healthy and broke than rich and sick.
Dale, I like to be healthy and wealthy and happy.
Oh.
and that's my goal every single day.
All right, man. Well, you know, I'm happy I met you, George. Thank you so much for coming in here today. And I don't have to wish you luck because you have skills. So thank you, George.
Okay. Have a blessed day.
You too, buddy.
Bye-bye.
All right, everyone, that's a wrap. So glad I hung around for George and had a chance to listen to him and check him out. And we'll be back tomorrow. Enjoy the rest of your day. And that's a wrap. And also remember, don't just count your pips, count your blessings. And we'll see you on Face tomorrow. You're very welcome. Adios.